Hi everyone, let's have a look at my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame very bullish scenario, where we're looking for this to be a wave 1 followed by a 3-wave corrective pattern in a wave 2, and now we're looking then for a big wave 3 to the upside, which usually is the longest and the strongest wave in an impulsive structure. On the lower time frames, we then have this to be a wave 1 followed by a 3-wave structure in then a wave 2, and this is then the beginning of a bigger wave 3 to the upside. Now in a wave 3, what you want to see is price moving to the upside more vertically, and one could say and argue that we are doing that at the moment, but you also really want to see volume moving to the upside while price is moving more and more vertically. And at the moment, if we look at the volume, we can see over here that the candles are pretty low compared to previously in this range. That's not really something you want to see in a wave 3, where the volume should be a lot higher while price is moving to the upside. We also have a little bit of a resistance area above price at the moment, so it will be interesting to see what price does if it is reaching this area between 27.3k and 27.4k. Now in this scenario, this wave 1 over here is very difficult to count in a nice 5-wave structure to the upside, which is necessary in a wave 1. It looks more like a 3-wave structure. So that's a reason that this scenario is a little bit of like an alternative scenario to me. But nonetheless, in this scenario, this has to be a wave 1 followed by a 2 and then a bigger 3 to the upside. Another reason it feels a bit more like an alternative is that if this is a 1-2 and then another 1-2, I prefer, and actually that is most common, to see the second wave 1 finish above the first wave 1. So there you get something like this, a 1-2, then a second 1, second 2, and then the bigger 3 to the upside, where the second wave 1 takes the high of the first wave 1. This is by far most common in an impulsive 1-2-1-2 structure. If we then go to the more bearish scenario, we're looking at this to be a corrective structure and then a 3-wave in a wave W, 3 waves in a wave X, hitting the target area for wave X very nicely indeed, for then eventually a wave Y to the upside, which then also is a 3-wave structure. Now we're then thinking about a double zigzag, which is a 5-3-5 in wave W, any corrective pattern in an X, and then another 5-3-5 in wave Y. And if we then zoom in to what is going on over here, then this is a wave A to the upside, so a 5-wave structure on the lower time frames, which we will check out in a second. So this then is a wave A followed by a wave B, and this then has to be a wave C. Now it is getting quite long for a wave C, however wave C tends to be longer than a wave A anyway, but if this is a very short wave A compared to, as you can see right now, this being a wave C, I'm not too sure, right? It doesn't look too great, but that doesn't matter for the fact that the wave C target area is right above price at the moment and also includes the target box that I mentioned before. So the target area for wave C is between 27.3k and 27.5k, which is a very interesting area. So first we have the target box over here, as mentioned before. We also have a triple top at 516, 27.516. We have high 1, high 2, and high 3. And for a potential wave Y, there's also the 0.618 taken from the low to the high of W to the low of wave X, which can be a wave Y target as well. So that is why I have it on the chart. Now the most common target for wave Y is between the 1 and the 1.236, a little bit higher, between 28.2k and 28.7k, which also includes the highs at 28.3k, which you see over here. Now, if price would move towards the upside and towards this area, one has to also keep into account this target box just above the target area for wave Y, sitting between 28.9k and 29.2k for some resistance. So we have to see how price is going to interact first of all with this area over here, because in a corrective structure, this could already be potentially the end of the corrective structure for then a move to the downside. But of course, we have to wait and see and want to see a little bit of proof of resistance. So if price is moving in this area, we want to see proof of resistance in that if it just pushes to the upside, it of course doesn't make sense to look for any shorts in this area. But if we maybe get a market structure change, or if we get a move to the downside, a retracement, and then bearish divergences, stuff like that, whatever fits your plan, your strategy, you know, whatever entry requirements you have, that's what you'd be looking for in this area over here for then potentially a short trade. But I do like, if we go up here, I do think it is quite likely we're going to take that triple top over there, because triple tops or bottoms are like a magnet for price. Now the potential trading setup over here was entering at the 1-to-1 after proof of support, something we spoke about, because price moved to the downside impulsively in a high volume candle. It is quite risky to enter over here, but then price moved to the upside, moved to the downside over here, creating bullish divergences, which I will show you now on the micro. So let's then go to the 15 and show you this, what has been going on the micro. So then we have this move to the upside, right? We had this bounce, then we had a like sideways corrective structure, and the moment price moved to the downside on the 5-minute candles, 5-minute time frame, we created bullish divergences. So a higher low on price, lower low on the CVD chart, which you can see over here. So a higher low on price, but on the blue line we have a lower low on the CVD with this little low over here. So lower low on the CVD, higher low on price, bullish divergences, absorption going on for then a potential entry, and looking for the main target for the bullish divergences, the first target I should say, which is over here, the high at 27.1k, which has been taken by now. So that is very nice. So from a trading point of view, stop loss is now at break even, and one could be looking for higher prices or closed over here. Now this, in this scenario, has to be either a wave A or wave 1, followed by a 3-wave structure in a wave 2 or a wave B, for then continuation to the upside in either a wave C or a wave 3. And the main difference between the C and the 3 is how vertical a wave 3 is and the volume. So a wave 3 usually is becoming more and more vertical, while volume, you want to see it increasing, right, massively. And in a wave C, it's more like a sideways move, while volume is not necessarily increasing too much. Now we do see a bit of spikes, but it doesn't look too great for a potential wave 3 just yet. Now the most common target area for wave C I already spoke about, but for wave 3 you want to see a minimum hit of the 1.618, which sits at 27.8k. So this is the minimum target usually for wave 3. So that is something to take into account, that if price is going to push towards the upside, this is something to look for. If you then look at the low time frame 5-minute CVD divergences, you can see that price has made some bullish divergences on the 5-minute, because over here price moved to the downside, and you can see the CVD, the yellow line over here of this move to the downside. But then we had to push to the upside, price retracing once again, creating a higher low on price, but on the yellow line a lower low on the CVD, which means that on the very low time frame 5-minute we have some bullish divergences going on. However, if we go to the 1-hour time frame, you will also see bullish divergences where we have a higher low on price. So the low over here that we made in this range at 25.8k, we have a higher low on price with the dump that we had last week, but then created lower lows on the CVD. So higher low on price, lower low on the CVD, which is a bullish divergence, this one over here. So higher low on price, lower low on the CVD, and the target, the first target for this CVD is the 27.6k level. So that is quite interesting for potentially those targets at higher levels. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.